Let's talk more about those movements this week with Martin Smith, who's a portfolio manager at eNCA Capital. Martin, as always, many thanks for your time this evening. Let's talk about the general markets, the movements that we saw this week, some of the major local and catalysts, including some economic data out of the US and some economic developments in Europe as well as China.
Yeah, there was a lot of things going on this week, but our market had quite a lackluster session today, and probably for most of the week anyways. I mean, volumes were quite thin, and I think our market's looking for a little bit of direction. We're looking for the next catalyst. We've obviously had a great run year to date, up in the region, I would say, about 18, 19%. So I think they're waiting to see what happens. It'll take a lot of the cues from what's happening globally. And we did have some global news out yesterday, specifically around CPI. I think the market was waiting with bated breath to see what would happen with US inflation. And I think that's going to be a major catalyst for kind of what markets do over the next kind of 6 to 12 to 18 months. But data seemed all right, a little bit ahead of expectations from a US CPI perspective. But it was all the things that are kind of transitory. So things like airplane tickets, hotels, secondhand cars, nothing really structural like housing or medical or the medical side of things. So I think the music keeps playing offshore, and locally, I think we're going to kind of keep treading water for the next little bit.
Right. What about the rand, Martin, coming down from 13 Rand 40 last week, Friday, when we were speaking? It was at around 13 Rand 40. This week, it's gone up to around 13 Rand 60, between 60 and 65. I mean, there's this famous South African saying that says, and then?
Okay. No, so what's happened with the rand? We also have to remember and kind of put into context what the rand has done over the last month, 2 months. I mean, we were speaking at 14, 15, so it's a good time to externalize money. So the rand has done a lot in a short amount of time. So I think it's giving a little bit back. But I mean, I think still interesting to see where it goes from here. Calling the rand in the short term is an absolute kind of fool's game, but I would be externalizing cash here, and it might get a bit stronger, but it might also kind of test the 14 Rand level again. So again, don't be shy. I think we're at fair value here, and I'd be still comfortable externalizing funds for clients here.
Right, and some company news now, Martin. Omnia releasing a trading update. They may be issuing a special dividend, and this is after being able to bring down its debt.
Yes, absolutely. So they had a trading statement. Results are out later this month, I think on the 22nd of June. And like you rightly mentioned, they're sitting on quite a big cash position. And I think that's what the market and us at eNCA Capital are waiting to see what they do. I mean, do they kind of have M&A? Do they do share buybacks? Or like you mentioned, do they pay a special divvy? And I think the kind of story was that they'd let us know around the results what they're going to do from a dividend perspective. But other than the cash they're sitting on, which I think makes it quite attractive, I think also it's attractive from a kind of cyclical turnaround story. If you look at their fertilizer business as well as the kind of explosive and mining side of the business, the backdrop is quite positive for them. So it's one that we like. It's one that we hold. A couple of questions we still want to see unfold, like, again, what are they going to do with the cash? But ultimately, I think it looks like a pretty good story.
SAA now, one of the big stories of the day. It's got investors. But I think the big thing that investors are watching for here is this new partnership going to stop the SOE from guzzling government money as it's done over the years?
Yeah, that's a very good point, or a very important point, is around government having to keep giving money to SAA, which it has done a lot of over the years. And I think that's why it's positive. Maybe not necessarily directly for the market, but for GDP, for government, for taxes, for the rand. I mean, we saw the rand strength on the back of that news. So overall, it is absolutely a positive move. And the way that I've read it is that the new consortium is going to come in, that they're going to give about 3 to 3.5 billion rands into the new entity and kind of recapitalize it in that way. And the government is only liable for existing liabilities. They won't have to put new funds in to pay for future liabilities, which is a very, very, very positive for the government. And again, it just takes a massive weight off their shoulders in terms of having to pay money into this this entity that was, like you mentioned, guzzling cash over the years.
Right, and then finally, Martin, MultiChoice earnings, we joked last time when we spoke about their trading update that they were going to be benefiting from people becoming couch potatoes during the hard lockdown. So they're saying they've added 1.4 million household subscriptions, but they are still struggling with some of their top-end markets, so those premium subscribers are a little bit of a sore point for them.
Yeah, absolutely. So intuitively, like you mentioned, people sitting at home during lockdown makes sense watching DSTV, but there's a couple of things we need to remember. One, new content wasn't exactly all over the show because people weren't filming and making things because of restrictions around the world. Two, live sport only came on board a few months after lockdown started. And the last thing, people were turning off their subscriptions. People think about bars. They've got a DSTV bouquet for people to watch live sport. They just turned those off. So they did very well, I think, in quite a tough, or tough, I'd say, very strange environment for them. But they managed to kind of operationally be all right. Also, the rest of the Africa business, I think, reduced its losses, which is positive. I mean, they've mentioned that this will be break even by FY23, and if it does so, I think you're going to have lots of positive leverage on this stock. I mean, if you look at it, the way that it's valued at the moment, people are putting a negative value on the rest of Africa business. So once it starts to turn around, I think we'll see the stock re-rate, pays a really good dividend, although I think they could have paid a little bit more, if I'm honest, in these results. So patient investor, I'd happily kind of hold on to this for a while.